So in case you missed it, 2024 has been one of the best years for Bitcoin ever. Even though it's only set about 140% gain, we have seen not only a new all-time high of $110,000, but we are now breaking historical records. Bitcoin itself, following the 4-year cycle, tends to have 3 very bullish months. So as you can see, 2011, 2012, 2013, massive gains for the price action, followed by a terrible performing asset and being a terrible down year for Bitcoin, down 57%. You scroll back up, you can see 2015, 2016, and 2017 as well were followed as some major bullish years for Bitcoin. The third year tending to be the most bullish, as you can see a 1,400% gain there in 2017, followed by 2018. You had a 74% correction, and then you continue the 4-year cycles. 3 years bullish, 1 year bearish. And now, once again, we're about to enter what everybody believes to be the third bullish year for crypto in that Bitcoin halving cycle. And with this, K33 points out that higher prices equals higher activity. Bitcoin adoption and volumes have shot higher than ever before. Daily averages show that we have spot volumes of Bitcoin reaching $3.7 billion on a daily moment. The two most bullish quarters, being Q1 and Q4, saw volumes stay material high for a long time, and higher prices attracted all sorts of new buyers and more willing sellers, naturally evaluating the volumes. The correlation to the S&P 500 grew even more, as in 2023 we saw an increase from 0.21 to well below its 0.6 regime in 2022, highly correlated now to the stock market. And it's been Bitcoin's year by far. A lot of you holding on to altcoins, which you want to make sure you stick around to the end of this video, because we're going to be going over not only the top performing sectors, but the ones that are going to benefit from a new all-time high for Bitcoin and a potential $214,000 price target. In 2024, only 25 altcoins among the top 100 coins outperformed Bitcoin. 51 underperformed Bitcoin, but saw positive year-to-date returns. And of course, those examples would be Ethereum and Solana. However, 18 coins among the top 100 saw negative returns in 2024, and the worst performing of these altcoins were layer 2s in Ethereum's ecosystem. Meaning a lot of your big altcoins have yet to actually even touch an all-time high. And yet, people are out here saying that this bull run's over, that you need to pack your bags. $110,000 Bitcoin was the top, and that we're now going to be dropping back towards $50,000 or even $40,000. So the question everybody's going to be asking themselves is, are we about to enter a bear market without even seeing altcoins outperform Bitcoin? Well, according to K33, the answer relies in their ETFs. If you were to compare Bitcoin to gold ETFs, which took 239 days just to simply hit $36.67 billion, all of gold ETF inflows since launch, which we're talking years upon years, reached an all-time high of $76.84 billion. Meaning Bitcoin has essentially kicked off with a 20-year head start. And there is still a massive amount of room to grow. And this was truly a remarkable launch. $1 in $30 being spent or allocated to ETFs in 2024 was placed in Bitcoin ETFs. Even more remarkably, Bitcoin ETFs represented a staggering 3.5% of all inflows into US ETFs, with advisors now weighing between 1 to 5% of their portfolios, and the 3.5% inflow suggests that investors are taking massive notice. And according to 13F reports to the SEC, K33 views it as likely that many hold a far more aggressive exposure than 1% as recommended, and that the vast majority of investors still hold a 0% allocation. Which means there are fundamental sound reasons to believe that Bitcoin ETFs are going to grow even further into 2025. Relatively few big funds currently diversify through Bitcoin, and enhanced portfolio performance of a moderate weighting in Bitcoin is due to attract more hands, as illustrated on the next page. You can see here that investors who maintain a quarterly rebalancing strategy and incorporate some Bitcoin into their holdings outperform in absolute returns and on a risk-adjusted basis. So with the Trump administration, you're going to just see institutions pour into Bitcoin in 2025. And by the way, Ethereum ETFs are starting to catch up. Public companies are hoarding coins. Public company Bitcoin treasuries have surpassed 550,000 Bitcoin. A vast contributor to that, of course, being MicroStrategy, but Mara and Riot and many different blockchain developers or miners have been adding to these node offerings. all while maintaining a more liquid market than ever. And this is why we're about to see all-time highs in 2025. Institutions are taking over as they're gearing up for the most positive crypto regulatory environment in history, with even the potential of a strategic Bitcoin reserve being established under the Trump admin. Bullish Catalyst Part 1. Leverage is at all-time highs. Open interest in Bitcoin derivatives has surged in 2024, reaching a peak of $53 billion in November after opening the year at $16 billion, showing the demand moving into these markets. And how we know this isn't a retail market is because the institutional demand is coming from the CME. They've constantly been a leader and dominated in 2024. And they're now even leading the altcoin leverage market. But this is perhaps why, when institutions are saying that Bitcoin might peak on January 17th of 2024, just a few days before Trump's inauguration, you need to pay attention because these individuals not only participate in the market, they create the market. And is exactly what could lead us to the end of the famous 4-year cycle. You see, they're not only projecting an end to this 4-year cycle, but potentially an early peak. Could Bitcoin peak already in January of 2025? Well, the average duration from the first all-time high to the last all-time high set in a cycle of the past 3 cycles is 318 days. Bitcoin reached its first all-time high of the cycle on March 5th of 2024, under the assumption that the average duration of the past cycles repeats a final cycle all-time high could occur on January 17th. This would match closely with Donald Trump's inauguration, and Trump's election has been the catalyst beyond the strong Q4 rally. And the inauguration would put a natural conclusion of the momentum given the likelihood of political processes needing time to materialize. The market has often been overheated, and going into huge news events like this, a Trump inauguration peak would reflect typical behavior of a buy the rumor, sell the news. As you can see in the bottom left, in 2013, days from first all-time high to the cycle all-time high were 313 days. 2017, 297 days, and 2020 to 2021 was the longest period, putting us at 345 days, or an average of 318. Which means Q1 could be gearing up to not only set a new all-time high, but also bring us to the end of a 4-year cycle. Now, of course, this would push us to a shorter cycle. So could this be a shorter cycle? Well, a global inauguration peak would not match past cycle lengths. The 2 former cycles lasted 1,060 days from through the peak. A global inauguration peak would not match past cycle lengths. The 2 former cycles lasted for 1,060 days from through to the peak. If Bitcoin were to peak in mid-January, the length of the rally would only be roughly 800 days, while early, it would mirror 2021, where Bitcoin's pop to $57,000 on February 21st marked the final wave of the most material growth during the 2021 bull market. So, of course, peaking on January 17th is not a guarantee, but historically, it does go to show that would put us near at least a local top. It could simply just mean there is an end to the concept of the 4-year cycle. Because of the institutional inflows, because of the growth, because of the Bitcoin Strategic Reserve, the pro-crypto administration, the adoption, etc., all of this could lead to what would be not only diminishing returns, but just simply a new cycle effort. As you can see here, the impact of the halving gets smaller every 4 years. And onwards, other triggers are more likely to sway the markets than the 4-year cycle, like ETFs, grassroots adoption, company adoption, and nation-state adoption, which are going to be all more materially essential drivers. So here is their first price prediction for Bitcoin in 2025. With Bitcoin becoming bigger and bigger, rallies are getting softer and softer, and Bitcoin has seen diminishing returns each cycle as it takes more focus to move a larger object. Now, Bitcoin saw a 251% return from its 2017 peak to 2021. If we were to use the same 45% reduction in peak return from 2013 to 2017 as a proxy for a potential Bitcoin top in 2025, we land on a possible price target of $146,000 for Bitcoin in this cycle. However, there are multiple different scales here, so method number 2. While returns are diminishing each cycle, absolute growth in market cap is pushing higher with each cycle. Meaning the peak of the 2017 bull market saw Bitcoin's market cap grow by $321 billion compared to its 2013 peak. 2021, a $967 billion. Showing that Bitcoin's market cap has grown faster in each cycle than the former. And under this assumption of Bitcoin's market cap growing reflect a 301% growth seen in 2017 and 2021, that would put Bitcoin's market cap atop around $4.2 trillion, or the equivalent of $212,500. Now again, according to K33, their back-of-the-envelope approach gives two potential highs for this cycle. However, they both linger on the assumption that Bitcoin remains as cyclical as it once was in the past. If method 1 holds true, Bitcoin has 39% more upside. If method 2 holds true, that is a 102% upside to the current level, again putting us around $212,000. But of course, if we get the potential event of a US strategic Bitcoin reserve going live, we find that level of method 1 is incredibly unreasonably low. Further, they emphasize that Bitcoin has already evolved into a very different beast than it was in the past. Bitcoin as an investment opportunity is gaining steady and sticky and large inflows, rebalancing pretty much everything. So they believe that the 4-year cycle in Bitcoin is coming to a natural end as a phenomenon. Macro axis and state policies are due to a softened volatility both up and down, with Bitcoin's next major psychological target being, in our house view, an eventual flipping of gold.
Big shout out to our sponsor, Arculus, for help making this possible. Disco fam, if you got some gains this cycle by following our calls, make sure you hold on to your gains and get yourself an Arculus card. We want to help you out, so we gave you a code DC20 and it'll help you save 20%. They're a great sponsor of this channel. We love working with them and we really like it. If you want to help support us, go get yourself an Arculus. It makes a fantastic Christmas gift. Let's hold on to our gains, and I'll see you at the top.
So the bottom line here is that your worst case study in this scenario would be $146,000 before Trump's inauguration, which really means you don't have that much time to act now, because this is not a flip of a coin. It either happens or it doesn't happen. And with Trump's inauguration taking place, if he can embed even just a few of these crypto policies and incite that value to come back to the States from the UAE, from Singapore, etc., and bring the billions of capital here, that is going to progress these markets exponentially. Again, pushing Bitcoin not only to 146, but potentially even further. And with tax loss harvesting happening all of the month of December, we have no major economic events until the beginning of January. And with all these institutions now looking at that Trump admin, they might be adding Bitcoin to their balance sheets a lot quicker, meaning a lot more demand is going to come back to these balance sheets, and not at a 1% allocation, not at a 2% allocation, but potentially 3, 4, or 5% allocations. But if this is going to happen, what does this mean for altcoins? Why have altcoins not performed well against Bitcoin? Why has there not been an alt season? Well, K33 believes that altcoins are a shifting market, and there are massive chain wars taking place. Ethereum obviously not going anywhere. It capitalized off most of the development in the sector. However, you noticed that L2s and other layer 1s, a part of the Ethereum ecosystem, did not perform well, and you've had other projects like Sui capitalize off those market results. As you can see here, leading L1s by year-to-date returns, Sui takes not only the lead on this, but by far, followed up by Tron at 151%, BNB coming back at 129%, all the way down to ETH at 69% returns. But you even see other venture capitalist projects like Arbitrum losing their market share and actually dropping in value over 40% year-to-date. This has been largely due just to the demand from retail on the meme coin mania front. All of the ecosystems that capitalized off, of course, meme coins were the ones that really tended to perform the best. Past that, you have an entire new sector emerging, which is crypto AI. Crypto AI now totals 44, and if not now 60, 70, potentially even $80 billion, with AI agents starting to run rampant, and even AI meme coins hitting billions of market cap. Followed by the most bullish sector, in my opinion, is going to be the DeFi tokenization economy, where you're going to have a lot of institutional demand from companies like BlackRock, Biddle, Chainlink, etc., utilizing all of the traditional investment markets through Fidelity, etc., and tokenizing those assets so that way they can actually capture and utilize DeFi borrowing and lending protocols, which is why you've seen a massive uptick since November 5th when Donald Trump got elected. They all know that this is the future of DeFi. I mean, just look at Aave's revenue from October to December. It's almost captured what it took the entire year to create. So DeFi, clearly the most dominant part of this sector. If you're holding altcoins, you need to be paying attention to into 2025. This is going to include tokenization, of course, AI agents and AI products, and more or less deepen that's going to be helping run and utilize all these different narratives. Top 10 performing altcoins in the last 90 days include HBAR, BGB, an exchange token, XLM, XRP, ENA, Doge, Ohm, Sui, Algorand, and one of our favorites, Ondo. But to sum up, guys, this market looks to only not just be heating up, but it's just getting started. And being, the ones that want to run for the hills right now, while markets kind of consolidate, they pull back a little bit. Altcoins have been smacked across their face. Yes, it's hurt out there. We don't even have the Trump administration in office yet. So my first target, I'm going to be looking at the January 16th, January 17th range. I think that is going to be a great opportunity if markets are pumped for the next 2, 3, 4 weeks into January. You're going to want to look to scrape some profits off the table. And the reason being, because after the Trump inauguration takes place, you might get that retail reaction of immediate gratification. They want Trump to come in and immediately place these policies that are actually going to take years or at least months to even pursue. So Bitcoin strategic reserves, deregulation or re-regulation through all of the new administrative officials. You're going to take, again, all of these different committees and all of these different government processes that are slow and not immediate, which could result in a bit of a pullback in those first few months. That's going to be my first target. But if we don't get that and we come out and we see those policies initiated instantly and we get that growth, the upside, as K33 research shows here, guys, is, it's not even predictable in the sense that we could be coming to the end of the 4-year cycle.